So let's talk about how much they made. I actually put all the information into my covered call tracker that I built on plebtools.com. We're going to talk about how much they made, how much they lowered their cost basis by. We're going to see if this is a strategy that they could continue to do, if it's really worth doing, if the juice is worth the squeeze, if it's just unnecessary risk. There's all sorts of risks they're doing by doing this, not just the ability to have their shares called away. How far out of the money are these calls, and all of that. We'll get into that right now. So this is my open source calculator website, Pleb Tools. This is the covered call tracker on here. You can do this yourself for any of the covered call strategy that you might be running. But what I did here, and you can see the numbers are actually going past here. I might have to do a little vibe coding to fix this. We inputted the cost of the Bitcoin, which they bought Bitcoin. They bought 4,710 Bitcoin at roughly around $105,000. This is just some estimates that I got from when they announced their purchase price and when they said they bought it and everything. So then we did these covered call strategy where they earned $3 million, right? This is, I'm assuming, and I think it's pretty safe to assume that these covered calls are going to expire tomorrow. So they earned $3 million in premium. And the covered call tracker here has actually minused that from the adjusted cost basis. So they earned 3 million. Their original cost basis was roughly, again, around $494.5 million. And they lowered that by that 3 million. So it's $491.5 million. So their average price of Bitcoin went from 105,000 to 104,362. So per Bitcoin, with this covered call strategy that they ran from end of January, so we can say February to the end of March. So this is essentially a 2-month long covered call strategy. They earned $637 per Bitcoin. Sure doesn't seem like a lot, doesn't really make a huge dent, right? They're down a lot on their Bitcoin position because they bought at the 105,000 and Bitcoin's trading around 70,000. So they're down, I think, 130 million or something on their position. And they've offset that a little bit by the 3 million. Now, $3 million is nothing to scoff at, but in comparison to these other numbers we're talking about, it's very, very minuscule. And is it really worth the risk that they're doing by not owning the Bitcoin themselves, by putting it in Coinbase credit and having it rehypothecated, having this potential covered call on it? If Bitcoin all of a sudden rips, it puts the position in jeopardy and makes it actually not worth doing. That being said, I actually run covered calls personally on my MSTR stack, and I'm sure glad I have. And I've done a much more aggressive covered call strategy than what they did here. So that's worked out for me, but I understand looking at this and seeing that and thinking that it's not worth what they're doing.